Hi everyone, I'm Ali, and in this lesson we will talk about the audit expectation gaps. The audit expectation gap occurs when there is a difference between the expectations of auditor and financial report users. The gap occurs when users' beliefs do not align with what an auditor has actually done. In particular, this gap is caused by unrealistic expectations of users, such as the auditor is providing a complete assurance, the auditor is guaranteeing future viability of entity, an unqualified opinion denotes complete accuracy. Auditor is responsible for preventing and detecting all frauds, and so on. However, the truth is that an auditor provides reasonable assurance. The auditor does not guarantee the future viability of the entity. An unmodified opinion indicates that the auditor believes that there is no material misstatements due to errors or fraud in the financial report. The auditor assesses the risk of fraud and conduct tests to try to uncover any fraud, but there is no guarantee that they will find a fraud should there be one. The auditing process has some limitations. For example, the auditor employs sampling. As a result, the auditor tests a subset of transactions instead of testing all the records during the financial year. There is a chance that a sample chosen does not truly represent the population to which it relates. Another reason is that some of the evidence available to the auditor is persuasive but not conclusive. Therefore, the auditor opinion involves judgment. There is always a rare possibility that the audit opinion is incorrect or false. For example, the unqualified opinion that the financial statements are free from material misstatement, but they actually contain material misstatement. Due to these limitations of the auditing process, it is impossible for the auditor to provide an absolute guarantee that financial statements portray the exact and precise circumstances of a company. Managing the expectation gap is an ongoing discussion in the audit industry. However, the auditing expectation gap can be reduced by these points. For example, auditors performing their duties appropriately, complying with auditing standards and meeting the minimum standards of performance that should be expected of all auditors. Peer reviews of audits to ensure that auditing standards have been applied correctly, auditing standards being reviewed and updated on a regular basis to enhance the work being done by the auditor, educating the public about an auditor's specific responsibilities, assurance providers reporting accurately reflecting the level of assurance being provided. Auditor is paying greater attention to the risk of material fraud occurring. As per ACCA 240, the primary responsibility for fraud prevention and detection remains with those charged with governance, or generally the client's management. Enhanced reporting to explain what processes have been followed in arriving at an audit opinion or a review conclusion. And the enhanced audit report format aims to reduce the expectation gap by providing details about key auditing matters, or KAMs, identified during the audit and the audit processes used to assess those matters. Key audit matters in the auditor's professional judgment are of most significance in their audit of the financial report. The number of key audit matters that will be included in the auditor's report may be affected by the complexity of the entity, the nature of the entity's business and environment, and the factors and the circumstances of the audit management. Nevertheless, It is expected that there will be at least one key audit matter for an audit of a listed company. ASA 701 outlines the required elements that must be included in each key audit matter. Each key audit matter must address why the matter was considered to be one of the most significant in the audit and therefore determined to be a key audit matter, how the matter was addressed in the audit. Well, we will be looking at this in more details on key audit matters in the next lessons. And in the next video, we will talk about the fundamental principles of professional ethics. Thank you.